Let's take a few minutes to consider the role of law and ethics. The foundation of any financial services business is built with the bricks of morality and ethical behavior. The treatment and actions towards customers and peers are measured in terms and phrases like financial success, repeat customers, and that all-important word, reputation. The mortgage industry in particular is no different, but because of the industry's role in what is for many consumers the largest financial investment they will make in a lifetime, ethics and morality are critical. To ensure this, regulation of the mortgage industry to protect consumers has grown exponentially with the level of home ownership. When moral and ethical behavior are not enough to ensure consumer safety, laws such as the Truth in Lending Act and RESPA have been enacted to provide consumers additional protections throughout the lending process. Statutes that dictate behavior and expected consumer treatment take what was once simply considered bad ethical and moral behavior and make them actual violations of the law, which are punishable by jail time, fines, as well as financial restitution. Perhaps one of the most important legislative measures enacted to ensure the enforceability of ethical lending behavior was the SAFE Act. Section 1502 of the SAFE Act establishes a means by which residential mortgage loan originators would, to the greatest extent possible, be required to act in the best interest of the consumer. The SAFE Act also facilitates responsible behavior in the subprime mortgage marketplace and provides comprehensive training and examination requirements related to subprime mortgage lending. HUD references the intent of the SAFE Act as the new standards, as well as the uniformity and consistency of such standards directed to be established nationwide by the SAFE Act, present a significant step in the effort to increase integrity in the residential mortgage loan market, enhance consumer protections, as well as reduce fraud. The SAFE Act encourages states to adopt a licensing system for mortgage loan originators. Each licensee will be evaluated as to his or her ethical activities and reputation at initial licensing and at each subsequent renewal. If complaints arise from a licensee's unethical treatment of consumers, it can be grounds for a license termination and/or non-renewal. States are provided a model which includes 14 prohibited acts and practices, which when violated become actual violations of the SAFE Act, many of which deal with the licensee's treatment of consumers. The evolution of quality control systems and automated underwriting systems, coupled with the adoption of the prohibited acts of federal and state laws, have provided consumers a safety net against unacceptable lending practices initiated by unconscionable ethical and moral behavior. Moral and ethical behaviors are addressed in this section of the course. Many of the actions and practices reviewed are now considered actual violations of federal law, but the lifeblood of these unconscionable actions rests with the ethics and morals of the licensee participants. This ethics and predatory lending module examines ethical practice through theories and case studies, along with definitions of predatory lending practices.